Thank you, Jerome, and hello everybody. You probably noticed the limp when I came up to the stage, but I think the lesson is you get to a certain age in life and you shouldn't try to keep fit. So, so if I go a little pale, it's not nerves, it's just excruciating pain from a torn calf muscle. But we're here to talk about things certainly a lot more positive, and the positive nature of the Sydney housing market is almost irresistible. And it's good news for all of us in the room who are property owners, of course, but not so good news if you're struggling to put a roof over your head, either as a first home buyer trying to get into the almost insurmountable Sydney housing market, or as a tenant, which is facing even greater challenges in the market. I'm not going to speak long today. Just perhaps set the scene and get a glow up from all you property owners. We just released our June quarter house price report, the Domain Group, and the Sydney median house price now stands at $1,178,000 and a little bit of small change. Now that's an increase of 1.6%, a little disappointing I guess, really, over the June quarter, and an increase of 12.7% over the past year. Perhaps a little disappointing as well, but I am being facetious. So the Sydney housing market keeps on keeping on in terms of prices growth. And we look at Sydney's median house price, the closest competitor to Sydney is Melbourne. Nothing really unusual there, that it's a little bit behind the mark, but its median house price, the Melbourne median house price, now approaching $860,000 and growing strongly. Now we've had a lot of narrative, of course, recently on the supply side regarding what's been record levels of new unit development in Sydney over the last 2 years. And of course, I guess we've been a hostage to that underlying narrative regarding the potential for apartment gluts and settlement risk and all these bits and pieces that were supposed to end life as we knew it in the Sydney property market. But our latest data shows that Sydney's median unit price has increased by 2.1% over the June quarter. The median unit price in Sydney is now approaching $780,000. Yes, $780,000. So how long until we get $1 million Sydney median unit price? And over the past year, Sydney's unit prices have increased by 10.1%, double-figure growth. So all the demand side issues, all the prices growth, clearly points to an imbalance continuing between supply and demand. And of course that's why we're here today, because at the end of the day there is only one way to at least moderate prices growth and to allow better accessibility into the Sydney market, and that's through supply. Now I did a gig yesterday morning, Showbiz Talk, on one of the morning breakfast shows, and it was about, the theme was the rental crisis, rental catastrophe. And we've spoken about house prices, and that should make all our homeowners here feel nice and warm and fuzzy. But of course the other end of the pineapple is if you're trying to rent a house in Sydney. Now Sydney's median, which we released last week, our report on the rental market, Sydney's median weekly asking rent for a house is now $550. Okay, so that was actually flat over the June quarter, but the sobering statistic from the rent report was that the Sydney's median asking weekly rent for a unit is now matching the house rent at $550 a week. So for the first time we now have unit rents and house rents matching each other. This is quite extraordinary. Now it does reflect, of course, that tenants are being forced into the cheaper option, which typically is houses, or used to be houses. Also a growing demand for apartment living as a lifestyle, and obviously the advantages of proximity and higher levels of infrastructure notionally in unit areas. So the point is that, you know, we've got the glow from higher house prices for homeowners, and then we've got the shock of higher rents for those trying to rent a property. Now, if you have any exposure to those that are in the rental market at the moment, you'll know that it is a complete nightmare. there are queues dozens long of prospective tenants trying to secure vacant properties in Sydney at the moment. The Sydney vacancy rate hasn't moved from around 2% for years now, we have stories, abound about tenants being selected out of a hat. Successful tenant. We've also got stories about tenants having to pay 6 months in advance. We've got apps coming into the market now which are designed to have prospective tenants bid for rental properties. I mean, this is a nightmare, and I think that, well may we focus on the issues to do with first home buyer activity, and that is, perhaps the end in Sydney, for the meantime anyway, of the great Australian dream. But if you can't put a house over your head in this market, that's a real issue. If you are too concerned to complain to your landlord about the hole in the roof or the rats running through the kitchen or whatever, because you don't want to get out into the marketplace and face those lengthy queues of prospective tenants, then I think this city has a real problem. Now, yesterday we discussed, as I said on the show, TV show, about the rental crisis, and we discussed some, perhaps some solutions. And one of the solutions I thought perhaps was to start reconsidering our rental markets in terms of what's traditionally been, I guess, a bit of a second-class focus on tenants. Start, having longer leases, having more of a connection to your rental property. I can hang a picture on the wall, I can have a dog, all these types of connections that recognise that Sydney-siders, Sydney tenants will be renting for longer and even for life. But at the end of the day, that's not going to mean lower rents. At the end of the day, it's not going to mean a reduction in rental growth. I mean, at the moment, Sydney is experiencing near record levels of migration. Every week, over 1,000 people come into Sydney, and that is net, the difference between those that come in and those that leave. And they have to live somewhere, of course. And most of those migrants, their first destination is the rental market. And yet last year, our net growth in terms of new development was about 700 compared to the year before. So clearly not just not catching up, we're going backwards at a rate of knots. And the challenge for residential development is not just low levels of supply coming through, it's the offset from challenges such as Airbnb, which are sucking holiday and business accommodation out of the longer-term rental market, and also the challenges from particularly investment properties that are being left vacant. So we have a crisis in the Sydney market, particularly in the rental market, but the crisis is chronic undersupply. All right, that's the challenge. And I walked out of the show yesterday and I thought, well, we can talk about all the wonderful strategies to make renting a better proposition in this city. But the best strategy is to have lower rents and more properties available, and that means more supply. Now, I spoke about the fact that the last year's development numbers matched the year before. Now, when you look at the back end of development now, we're actually 14% lower to this point of the year in approvals for dwellings in Sydney compared to the year before. And yet we're nowhere near matching supply and demand. So can you see what the back end looks like now? If we can't match it following record levels of development that we've had in the past 2 years, and we're falling off the supply line at the back end, what hope have we got for creating a better housing market, a more accessible housing market in the future? So clearly this is a very simple supply and demand equation. And of course there are challenges to supply and demand in significant urban environments such as the Sydney market. And I welcome the initiatives of this group to try to match these significant challenges by increasing supply into Sydney. So all the best, and thank you for your attention.